and the best small business loans for bad credit are. Hi, this is Michael with Viral Funding Solutions, and in this video I'm going to go through what are the best small business loans for someone who has bad personal credit. Perhaps it's your business credit, there's nothing there, or it isn't good enough to meet the demands of certain services and what you're looking to get, and a few other components. And I've created another video on this in the past that I'll try to link you to down below. But what I want to cover is, what are those services? What do they look like? What are their details? What do I need to qualify? Do I have to bring in collateral? Do they have hard credit checks? Is it low, medium, or high documentation that needs to be supplied, with a few other things? So I'm streaming this live on TikTok, and if you're here, please give me a hashtag live in the comments or a hashtag replay. Perhaps you're watching this later if I've uploaded onto the YouTube channel. And so I'm so grateful for you guys to be here, and let's get into it. So what are the best small business loans for someone who has bad credit? First and foremost, you'll be limited. If you're expecting to get these SBA loans, how can I get them with bad credit? That isn't something that can work itself out. And I recently created content on this that I'll try to link you to down below if it's already ready. If not, it will be in time. If you're expecting to get the highest of the highest type of financing, but you have like a 500 and above, less than 600, even between 600 to 700 or 600 to about 625, it can be quite difficult to qualify for services where you're getting longer terms. That's the issue right there. So if you have bad credit, and I'm going to put it in the range of the 500s for this video, if that's the case, then you are limited on what are called cash advances, or in another word, merchant cash advances. And what these are, you're paying your repayment with your future receivables. They're going back to the merchant or the lender. In an example, let's say you make a certain amount of sales one day. Now you make a higher amount that day, more gets taken out. You make less one day, less gets taken out, if anything. And sometimes it can be fixed, so you know what's being taken out of your account. Sometimes it's just based off of credit card processing. Other parts, it's credit card processing and it's more flexible, and you can have other kinds of cash payments, ACH, wire, electronic, etc. So when you have bad credit, you're looking at these more medium to higher rates, and you'll fall more likely into like the 19 to 50%, if not 19 to about 70% or so interest. And that's because you are assessed a very high risk. Bad credit does limit you on how much you get approved for in your terms. So let's drop an example. Let's say you're doing $20,000 a month. You could be doing $100,000 a month, and you have a 500 and above, up to 600, even up to 600. And I'd say let's just keep it in the 500 to 600 range, because that's what we can kind of consider it as being bad credit from there to there, and even less than 500, which a lot of individuals have. So you'll want to meet the minimum of a 500 at least. Other services where they're going to expect you to have at least a 5,000 plus monthly revenue in the last 3 or so months, they're going to want to see at least like a 550 FICO and above. So with this example, let's say you're doing 20,000 a month and you have a 550 FICO, we'll put it at that. You're over our 15,000 minimum to get into a bigger tier, as opposed to being between 5 to 15,000 or just up to 3,000 you're doing per month, or 3,000 per month, I should say. And you have a 550 FICO, you're doing 20,000 a month. Maybe you have 5 years, 10 years in business. Maybe it's more recent. Maybe it's just 6 months. If you have 4+ months and above, better. Anything underneath 4+ months, anything underneath the 4 months, usually can disqualify you for funding. So I would say 4+ months with certain lenders, 4+, and then about 15,000 and above gets you into a little bit of a higher range. If you're doing 20,000, you have over 4+ months, the 500 minimum FICO with one of our lenders. Again, other cases would be a 550. But with this example, going back to it, let's say you got approved for 25,000. So what happens is you get between 10 to 15% of your annual gross sales lent to you. In some cases up to 20, but it's more so 10 to 15% and even less in today's market. So if you're looking at 10 to 15%, you have to do a calculation of what you're doing annual gross sales wise. And we can also break it down to what you're doing in monthly revenue. So if you have a low month, let's say you're doing 20 and then 25 and then you had 18,000, we'll take that $18,000 month, and we can also assess the average of the three and then compare it with the lowest month and see if it's very close. We might take the larger amount. And if the larger amount was the most recent one and you're projecting upwards, it gives you more room to receive more funding. So let's say we base it off that 18,000. 18, 20, 25 is what you were doing. The 18,000 was just recent, right? It's not projecting upward. So we're going to do giving you 75% of that up to 150 or up to 200% of that. Other companies and other lenders will say, well, I'll give you 50 to 150% off of your average monthly sales within the last 6 months. And then we'll look at that. And then we can see what your highest is and probably take the highest if it makes most sense. Now, with that example, 18, 75% of that times 2, you're in the $36,000 to $40,000 range. If we could push it up there, that would be helpful. But that's what you're looking for in those parameters. Now, if you have bad credit, let's say you did get 25,000. Well, we have to understand first, we're reverse engineering and asking ourselves, you already have bad credit. Let's say you have 550. Well, you received 25,000 and you want 7 to 11 months, or you need 12 to 24, you're looking for 2+ years. That won't work. You're a high risk. You're going to fall into a 4 to 6 month range, if anything, maybe 4 months, up to 6 months. And your rate's going to be higher because of your credit. It could be also a combination of your time in business, your industry, your cash flow, is it fluctuating, average daily bank balances, monthly sales. So you can have very strong cash flow, but have bad credit and still get lesser terms, higher rates, as opposed to somebody who's in like the 600 and above. If you had a year's plus worth in business, above 600, I would say above 25,000 in monthly revenue, then you're looking at about 7 to 11 months. 50,000 and above can get you in the 12 to 24 month range with the 700 plus FICO, 2+ years in business. And so without going too in depth, because I can spend a lot of time on the subject, just know that with bad personal credit comes a higher risk. You have lesser months. You're looking probably at between 4 to 6 months, not that 7 to 11 month time frame, not even 12 to 24 plus months. And the rates are going to be higher. So if you're thinking about getting something at 19 to 30%, that won't even work because you're assessed at higher risk. You're going to fall between 40 to about 40 to 70%. Depends on the type of revenue you're generating and what lender that's going to. And sometimes I've seen it higher, but we don't always go that high. Just again, it depends on a few certain circumstances, but you could be falling in that 40 to 50% at that 15,000 and above revenue bucket. So 40 to 59, 40 to, I'd say 40 to 49%. Let's just put it that way, because you qualify for a higher tier. Now, if you're a higher risk with lower revenue, now you're going up to about 70%, likely looking at that 40 to 70% range. And it depends on how fast you pay it off. So with all that being said and done, how can you actually fix all of this? Now you know how to get a small business loan with bad credit, what you are limited to, not even a personal loan you can use for business because they require higher credit score. But you could look at doing a form of the credit line hybrid. You can get a guarantor. You can act as a guarantor there and get underneath their account, and they can help you with their credit score, so you can apply for the credit line hybrid program and get into credit card stacking, building up your business credit with a few other things. So when you combine those, that helps you build 20, 30, 40,000 in credit cards, and you just have to be careful about how you use them. So if you're looking for a certain amount, you have the credit cards. You were an authorized user because you have a guarantor, and that relationship just has to be trustworthy. And then you're building the business credit at the same time, and you're getting a lot of higher limits in funding on the back end that's not tied to other things like personal credit. It's your business credit. It's not your Social Security, etc. So those are the ways you transition away from, well, I'm getting a higher interest rate, lower terms, I already have 2 positions, I should get more funding because I'm a proven client. No, it's not exactly how it works. There are other things we have to look at. Usually we get you less funding if you're in the 3rd position, 2nd position. Maybe it's a lesser term. Maybe it's a little bit of a higher rate. Even if you're proven, depends on how much is on the balance. If you're in a 1st position, somebody else comes and buys it out, or we transition into another lender, and maybe it's a different type of repayment, or we're still making the type of repayment underneath the same service. So there's a lot of ways this can go. Just know that you will be a little bit limited unless your cash flow, we're looking at your revenue, it's higher, and that can greatly outweigh what you were seeing in your credit, and we can give you a lot more funding. Just know that you're going to be limited, and what you need to understand is the workaround, and I'll get to you guys in a second. You have to start somewhere eventually. You have to say, well, I have bad credit, I'm going to work on it, but I needed this 20 to 30,000 that I got approved for. I get it. And in the meantime, I'm going to work on my credit. I'm going to fix it the way that I need to. When I come back, I'll be from a 550 to about a 650. And then that's a huge leap, but we're looking at short and or long term. So in about 3 to 6 months, you're saying to yourself, when this is almost paid off, over 80% of the balance, or 100% paid off, now you're at a 650 level. So what does that do? You can stay within the same service, for one, the cash advance, and a lot of this can be a daily or a weekly repayment, and that's what you're looking at. So don't be coming in this like, well, I don't want a daily or weekly. Well, you don't qualify for anything else. And a lot of the times, daily and weekly are best in a monthly repayment, because you try to transition into a monthly. However, you may have a lot of rent you're paying, credit card, a lot of different things you're doing, business expenses, things you have to come to the end of the month, where let's say we gave you an additional 4 to 5, 6,000 or so we have to give you on top of this funding. So now you're paying 10 to 15,000. You think you can actually do that? You may think so, but it's a lot to take on, a lot of pressure at the end of the month. So a lot of these daily and weekly work, especially with the right cash flow. If you don't have the right cash flow, of course, you're never going to justify it until you fix those issues. So you fix it by starting somewhere, building up. You pay off, let's say you have 6 months in a term because you're limited on credit. Now, if you have better credit, of course, that gets you in a different bracket. We can talk about that another time. I've created content on that. I'll try to link you to down below in the description if you're watching this later on YouTube. But what you should understand is, even if you got 6 months, you pay off this in 3 months, you're an eligible client for a refinance type of situation and an additional amount of funding. We can look at getting you more on top of that, and then it just adds on over time. So what that means is we can look at getting you more funding, even with the shorter term. Let's say you didn't get all the 50,000 you wanted, but you started off with 25 or 30,000. Well, the next time around, in 3 months' time, we can look at getting you more. We probably get you the full amount by then. We get you an additional 20 to 30,000 and even more. And then we raise the rates, or we lower the rates. Where you had a 45, a 50% interest, now you're at maybe 40%. And then you drop it down to about 35, 34 or so percent while you're increasing your terms. Now you're in that 7 to an 11 month time frame. Now you're at 9 months. Now you're climbing up to 12 months. You're increasing your credit while you're doing that. You're establishing your business credit. You're focusing on growing your revenue month to month. It's even helping you with your profitability. This is how you do this. Now, if you're looking for other alternatives, I'll link you to them down below. But if you're expecting something that's not there, literally it isn't, because of credit, because maybe it's a cash flow requirement, maybe it's a time in business, the industry, etc. We have to encompass everything as a whole and look at it and see what you would qualify for. And if you can start somewhere and take an initial amount and then grow up, that's what you want to do. Maya, can I apply for an SBA loan without an existing business? It will be hard to. I know you can finance a startup, but it is quite difficult too nowadays. In today's market, we do want to see an existing business because it goes off your current business to see what you're eligible for. Whether you're getting funding for your existing business or businesses, multiplying it by different entities, or you're acquiring a business. I just made a video today. I'm going to link you guys to next week. Hopefully I can publish it. It's already done. But I spoke about, can you get an SBA loan with bad credit, how to get a loan for a business acquisition. I spoke about all the different ways to do that. So look out for that on the YouTube channel if you guys are not there yet. But yes, we want to look at your existing business primarily. If it's the SBA 7A and 504, that's primarily what you want to see, as well as other types of solutions. You'll see the microloan program where they can help more newly established startup businesses. So in a way, that's different when you're going through the SBA on that form, as well as the Community Advantage program. And if you're trying to get mentoring, there's the 8A program. So yeah, I get that question a lot. I'll leave this open for about 2 to 3 more minutes. And then make sure you look for everything in the bio, in the description. You have a better understanding of how to get a business loan with bad credit without me showing you which program that is. If you want to learn more about those, the questionnaire form will be down below, as well as some other recommended programs you guys can check out. Good question. Why would somebody need an SBA loan? Yeah, there are a variety of uses when you get an SBA. Not talking about an EIDL loan right now. That one's pretty straightforward. What you're using it for, relief. And when you're getting an SBA 7A/504 loan, it could be for commercial real estate. It could be for another form of real estate, land, something you're trying to purchase and you're doing a ground up construction project. You have home builders. Maybe you are the builder. Maybe there's a developer, and maybe there's a trucking company who's looking for more equipment, and it's over 400 to 500,000 because that's what lenders want to lend up to and more, with bigger pieces of projects and equipment. So if you're an individual who's looking more of a long-term return on your investment, whatever that percentage is, these lenders are willing to come up front and say, hey, we can finance up to 90%, 80%. We can guarantee this. You come in with 10% down payment because you want to acquire a business. And that's what people want to do, because most business acquisition lenders are with the SBA. You can do it a different way, which I also released that in the video that I made earlier today. But they want to use it for expansion. They're looking for a huge amount of marketing campaigns, or one huge marketing campaign on top of moving into a new office building. They're renovating something or they're fixing something, and it's going to take them about 2 years to get like 50-80% of return on their investment. They'll get 15% of that within the first year. They have a truck of about 400,000 to 500,000 they're looking to finance. And it's better if you have multiple things like payroll on the back end. You have quite a bit, but your primary use for growth and expansion is what we want to see. And what would that return on investment be in the short and in the long term? Usually is what people get into. So inventory, getting new inventory, I can go on and on, but there's a lot. Correct. Yes, you can. You can get more than one loan, SBA 7A specific. I mean, you have multiple businesses. Maybe it's underneath one entity. We can look at getting multiple, seeing how we can do that, where you currently are in your payments, and how far you've paid off, and a few things like that. But if you have an SBA EIDL loan, then you can get an SBA 7A loan. So just keep that in mind, 504 loan. Perhaps you have an SBA loan and you're looking for an additional in an unsecured financing. Perhaps you get an SBA loan and you're looking for merchant cash advance on top of that. You want more funding. It wasn't enough. You needed an additional amount because something came up, or you knew you needed it. A line of credit, a term loan. Maybe it's a personal loan. It's quite a bit more. Maybe it's an asset-backed solution where it's not the SBA. So you have to look at it from different points of view and ask yourself, do I need a line of credit? I didn't get it with the cap line program. I got a lump sum of this. I'd like to have an unsecured amount. Boom. Or we start you off with that and then say, hey, once you get approved for the SBA loan, we can consolidate it and put it all underneath one, pay it off. And it helps you because the SBA loan has a longer term duration and lower rates. Hopefully that answered your question. About 2 to 3 more minutes. I'll extend it. I answered this earlier, and I'm going to just say no. I mean, there's the microloan program on my channel. If you guys want to learn more about that, go to my name, Michael, last name Granados, videos, type in microloan, and you'll learn more about that for newly established startup businesses. And I also have a lot of grant opportunities a lot of people are taking advantage of right now. The Community Advantage program, you can type that in as well, and you'll find out more about that. Angel investor, startup personal loans. If your credit is strong enough, you're doing a 680, 700 and above, then we can look at doing a form of a startup loan. We'll just have to look at, since it's on the personal side, taxes and or pay stubs and a few other things to verify your income, and then make an assessment of how much you can get approved for. I have business owners right now who are in the process of not getting approved from an SBA loan to acquire a business or for other purposes, and they're looking at getting a personal loan on top of a term loan or a cash advance on top of perhaps a line of credit. and they're using all that funding that they're putting in their existing business for the purchase that they can use those funds for that existing business, if that makes sense. They're trying to acquire. So it's very smart thinking, and it has to make sense to you at the end of the day. Like, okay, what am I willing to forego? Maybe I didn't want a personal loan, but the benefit of me getting this business is going to really help me pay this off quickly. So I may have to take a quick inquiry, a soft pull, and it can still possibly show up, but you have to think about the benefit of doing that as opposed to another alternative. I will leave you guys with this. If you do need any help at any moment in time, don't hesitate to get a hold of me. The best thing to do, fill out the questionnaire form in the bio if you can access that. If not, my site down below in the description if you're on YouTube, but you can also visit viralfundingsolutions.com and scroll down to the part where it says how it works. After the 3 steps or so, click on the button and you'll come to the questionnaire form. Appreciate you. Thank you for tuning in and spending a little bit of time with me this Saturday. I didn't have this planned because I wanted to save energy, but I went into video mode like 20 minutes ago, 30 minutes ago, and I really wanted to crank those videos out so I wouldn't do them on Monday. Sacrificed the Saturday of my energy and time, but it was well put into use, and I'm always here for you guys at the end of the day, humanly as possible. On the personal side, I care about you. Secondly, I go into the business, and I'm always going to be here as your business loan broker you can turn to for everything. That's it for now. Take care. Bye.